Today on Forbes, Trump's trade war mints an unlikely new American mining billionaire. In July, the Defense Department made an unusual move for a federal U.S. agency when it purchased $400 million of newly created shares, plus warrants to buy additional stock, in the rare earths miner MP Materials. As part of the deal, the DoD also signed a 10-year agreement to buy rare earth magnets from MP Materials to power its future instruments of warfare. The federal government came calling because MP Materials owns the only rare earth mine in the U.S. at its Mountain Pass site in California's Mojave Desert, where it extracts, refines, and separates rare earth materials like neodymium and praseodymium. Those elements are essential ingredients in the magnets used by electric vehicles, drones, defense systems, robotics, wind turbines, and other advanced technologies. Shares in MP Materials have risen 150% since the DoD announcement, pushing James Litinsky, founder and CEO, into the 3 Comma Club. The 47-year-old Las Vegas resident is worth an estimated $1.2 billion between his 8% stake in MP Materials, worth about $1 billion as of last week's market close, and over $200 million in cash and outside investments, per Forbes' estimates. Litinsky, who did not respond to Forbes' request for comment on his wealth, is not your typical mining magnate. He studied economics at Yale and received his JD and MBA from Northwestern University before working at investment giant Fortress Group and then founding his own hedge fund, JHL Capital, in 2006. His firm acquired $20.5 million worth of distressed bonds issued by Molycorp Minerals, the previous owner of the Mountain Pass site, in 2014. 3 years later, during Molycorp's bankruptcy proceedings, he turned those bonds into full ownership of the mine, which had flooded and was inactive. After getting $50 million in financing from a Chinese backer and orchestrating an 18-month cleanup effort, the newly named MP Materials began mining operations in 2018. Litinsky took the company public in 2020 through a SPAC, and its output has more than tripled since it began operations. While Trump's tariffs and trade war wreak havoc on global supply chains and raise consumer prices in the United States, MP Materials is uniquely positioned to benefit from the chaos, especially from the escalating standoff between the US and China. That's because China dominates the global rare earths trade, processing 90% of the metals and producing 95% of high-strength magnets. The US imports nearly all of its 7,000 tons annually from China. China has used US reliance on its rare earth magnets as a key bargaining chip in its negotiations with Trump. Following Trump's so-called Liberation Day tariffs announcement in April, China began requiring foreign companies to obtain export licenses for rare earth magnets, which caused a crisis for US firms. Exports of the magnets to the US declined 59% year over year in April and a whopping 93% in May, the Wall Street Journal reported. For MP Materials, the chokehold spurred a surge in domestic demand. In April, Litinsky told Forbes, quote, "The sense of urgency, I've never seen anything like it." Ironically, Litinsky has relied on the Chinese to get MP Materials off the ground and sustain its business prior to Trump's trade war. Shenghe Resources, a Chengdu-based rare earths giant that is partially owned by the Chinese government, helped finance JHL's 2017 bid by purchasing $50 million of future rare earth concentrate produced by MP Materials. Those funds helped pay for the mine's cleanup effort and new capital costs, in return for an 8.4% stake in the company, which Shenghe still holds. It has no operational involvement at MP Materials and does not have a board seat. Shenghe is also its largest customer, accounting for 80% of its $204 million in revenue last year. That is changing fast. After the so-called Liberation Day tariffs and China's retaliatory tariffs, MP Materials announced it would stop shipping its products to China and focus on other buyers. For full coverage, check out John Hyatt's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.